Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Thursday, August 10th, and then we'll see how things look for Friday, August 11th. The CPI came out. It was taken as positive. We hit overhead resistance and then spent the rest of the day coming back down. Before I get started, I am looking at doing a free online course that'll probably happen in September. Some of the areas that I'm looking to cover will include some high-level look at strategies as well as support and resistance. I'll pretty much just focus on the end of day as it applies to support and resistance. And then I'll also be sharing some of my thoughts and my approach to technical analysis. One of the things I want to put out there for some feedback: what times would be good for you? Personally, for me, the weekends are terrible. I'm doing all the other videos at that time. During market hours works for me, but it may not work for you if you are away at a job. I might schedule more than one time if that is needed. Let's go back and talk about what happened. Some comments that we can make. Interest rates fell initially after the CPI report came out, but then they went back to climbing, and that's being blamed somewhat for the decline that we saw later in the day with stocks. The S&P 500 still remains below support, and it also is still under 4,500. On a short-term basis, we have the Stochk RSI, the Williams percent R, just the CCI 20, the 14 has fallen off, and the stochastics that are giving us extreme negative readings. You could also say that we're oversold. The dollar was up and interest rates were also up. The 30 to the 5-year curve is still looking more normal, where all of our other yield curves remain inverted. Sentiment is positive. It was unchanged at 67. Our trend is negative, but the ADX is weakening. It's dropping below the moving average. Another day or two and we might actually drop below 20. Our bias is mixed. We ended up just having a slight up day coming off the heels of some negative days. And then our momentum, I'm keeping it negative because the last 2, 3, 4, 5 days have been negative. The economic reports that came out, the big one was the CPI. It came in as expected, being up 0.2% month over month. The core CPI, when you take out food and energy, it also came in as expected, being up 0.2%. On a year-over-year basis, the total CPI is up 3.2%. Last time it came in at a year-over-year rate of 3%. The core CPI ticked down just a little bit to 4.7% on a year-over-year basis. Last time it came in at 4.8%. Weekly jobless claims came in more than expected at 248,000. They had expected 230,000. Continuing claims came in at 1.684 million. The Treasury budget came in at a minus 220.8 billion. Last time, a year ago, it was down 211.1 billion. Here's a chart of the CPI. I usually don't show this, but it's such an important chart with what the market is fixated on. We're seeing a bit of a tick up when we go back over the last 12 months and see what has been happening with the rate of change. On a month-over-month basis, we are flat. Looking at the core CPI, it's also starting to decline on a 12-month basis with the rate of change, where we were also flat on the 1-month rate of change. Giving a quick look at the employment situation, with the red line, we are seeing a tick up in initial jobless claims, where we see continuing claims continue to drop off, and the unemployment rate that we got a week ago is at 3.5%. Looking at the intraday chart, we did gap up higher. We got above R1. We even made it above R2. Then the market stalled out, started to come down, fell back down to R1. We tried to bounce up off of that. That didn't work. We tried to come down to the daily pivot, bounce up off of that. That didn't work. We finally went down to the unchanged level. We did go negative for a little while, saw a little bit of a bounce, and then we came back down and closed pretty much unchanged. Looking at the growth to value ratio, where it did see some initial strength and then it went all over the place with the market, we saw some strength going into the end of the day, and we did end up positive with this ratio. This is a chart that I'm really keeping an eye on. This attempts to measure what is the smart money doing. We saw this drop below the moving average right before we saw the S&P start to have some difficulties. It tried to recover a little bit, but now we're dropping below the moving average. So this is a warning sign. We're also keeping an eye on the Chaikin money flow, which also tries to measure what's the smart money doing. We're seeing a deterioration in this overall chart. Looking at our trend, where we are declining with the ADX, it's below the moving average. The green line did turn back up just a little bit, and the red line did decline, but I want to give this a little bit more time. On the short-term charts, we're still seeing where the trend is weakening. The red line is still below the green line, and we could drop below 20 on both of these charts in the next day or two, suggesting that we're going from a trending environment to a non-trending environment. Looking at our moving average tree, we're below the 20-period moving averages, but we're wondering, will the 50-period moving averages provide support? We're also watching that on the NASDAQ. We broke down below this S1 level, but we're right about on the 50-period moving average. This is what a lot of folks are seeing as a pullback. If we're going to get some strength, we're going to have to bounce up off of this moving average. And we're seeing that same thing with the NASDAQ 100. Came down to this S1 level, right about at the 50-period moving average. If we're going to see some strength from here, we're going to have to bounce up off of this, or are we going to continue to lose this level? The small caps also right about at a pivot point, just a little bit below it. Will this support hold? I'm counting this as secondary support. And we're also seeing some secondary support with the mid caps. We dropped a little bit below the pivot point. Can we start to go back up, or will we continue to fall and possibly come down to the 50-period moving average? The FANG index is a little bit below its 50-period moving average, so you could say that support has already been lost here. But if the other indexes kick into gear, the FANG index may see some strength. Or are we going to continue to fall lower? On a weekly chart of the S&P, we're below the resistance level now, and we're seeing that same thing with the NASDAQ 100. So what's our outlook for Friday? We do have a lot of S&P 500 companies that will be finished reporting at the end of the week. The technicals are negative and we're below support. The economic reports coming out will be PPI and consumer sentiment, the preliminary reading. We're watching the geopolitical events, but right now the market is fixated on inflation and interest rates. Here's the updated economic calendar for the week. Looking at the Stock Traders Almanac statistics, we're neutral to negative with the Dow and S&P. We're neutral to positive with the NASDAQ. Here are some updated charts that Jeffrey Hirsch posted on Twitter, where if we look at the green line, that's the S&P 500. Historically, going forward, that shows some improvement going into the end of the year. We're wondering if the NASDAQ has hit its lower level of support and will bounce up off of that. Historically, that is what has happened. Then looking at the S&P pre-election year and then the aggregate scale, the purple line is where the S&P is at. We're following the green line here, which is a pre-election after midterm bear, which is what happened, where historically we do see some recovery going into the end of August. We will be on the 9th trading day of the month, where with the dashed lines we see more improvement. That's pre-election. We see a little bit of improvement with the solid green line. So our scenarios, we're going with the down one until our technicals prove otherwise, and we are below support. We're not going with the up scenario right now because we're looking pretty negative technically. We're not going with the sideways trend because the ADX, although it's weakening below its moving average, it's still above 20. We don't go into a sideways stance until we drop below that 20 level. The warning signs, it did look like there was a convergence of these short-term bearish signals that came together that's been putting a lot of pressure on the S&P. Longer-term trend signals may be signaling a top. We're just a little bit below that with the S&P 500 weekly chart and the NASDAQ 100 weekly chart. Seasonally and historically, we're in a weak time of the month, but we could be coming into a positive time based on the Stock Traders Almanac research. The S&P 500 oscillators, though, are negative, as well as the NASDAQ 100 oscillator that we've been watching. The VIX has been going up a bit, but it's still showing that there's not a lot of fear. And I'm watching the accumulation and distribution, as well as the Chaikin money flow, because they're showing some weakness, and they tend to measure what the smart money is doing. Small caps and mid caps did close below their secondary support. Can they regain that? The cumulative new highs, new lows for the NASDAQ are still showing weakness. We're still above that level on the 3-year yield where we were at back in 2007. The S&P 500 growth is weakening, but it's still in an uptrend. The weekly pivot acted as overhead resistance about 2 weeks ago, and we've been coming down since that time. The parabolic SAR is negative and the vortex is negative, and then earnings are released on a case-by-case basis. The positive signs, we do have seasonality and setups that are pretty far in the background, but they're still there. The daily special K chart is still positive, even though it's rolling over a bit. The longer-term equity put-call ratio, it's turning up slightly, but it's still positive. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture, but we've been seeing that ratio take a hit lately, and it's been declining. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they broke above overhead resistance. They had trouble dealing with daily resistance. Now we're at the 50-period moving average. Are we going to get a bounce up off of that or continue to decline? The Staples to S&P 500 ratio is declining, which can give support to the S&P. The Russell 2000, as well as the small cap index that we look at, in addition to the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive. The financial sector has generated a recent golden cross. So our conclusion, we're negative and below support right now. In the short term, we're negative and we're somewhat oversold. We could really get more oversold than this if things remain negative. In the intermediate term, we are negative. In the long term, we still remain positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length daily video update. Have a great day, and I will talk to you in the next video.